How valuable to you would it be if you could predict what was going to happen in 2023 in the real estate market and for the next 2 years? Well, my name's Kris Krohn, and if you're a subscriber on my channel, you know that I've done thousands of deals, and my livelihood, my legacy, everything depends on my ability to understand the market, which means I'm consuming all of the economic information out there. And in today's video, I want to talk about 2023. I want to talk about where we're at, and I want to also talk about predictions. Where are we going? Because this information is not just worth millions to me, it could be worth millions to you.
One shot, now the future is yours. Go!
Let's get a grasp on the market because so much has changed when it comes to these pesky little things called homes. Right now, the median existing home sales price broke through $400,000 for the first time in 2023, hitting $410,200, the second highest price ever recorded, and is now poised to surpass the all-time high of $413,800. On top of that, mortgage rates for a 30-year mortgage right now are hovering right around 7%. Now, it's kind of crazy when you think about this, because rewind the clock just a couple years and you're like, wait a second, this $410,000 house, wasn't this just $300,000? It's worth a whole $100,000 more. Well, you think if the house went from $300,000 to $400,000, it went up 25%. That means that your mortgage just went up 25%, but it didn't. Because mortgage rates are now hovering around 7%, it means that that $400,000 mortgage is also going to be more expensive. Most people report on a median-sized home that their average mortgage today versus 2 years earlier is up $1,000. And with 62% of the nation living check to check, how many people can really afford an extra $1,000 a month? Not many. Which is why we are missing 6.5 million homes in this country, but people aren't there to buy them until those rates come down. So let's talk about how we got here. Home prices saw a meteoric rise during the pandemic, driven by factors such as high demand, low supply, and record low mortgage rates. Like even right now, I'm doing an addition on my house and we're ordering the lumber package. And right now it costs several $100,000 less than it would have 2 years ago. You remember when like the price of lumber shot up? Well, right now we have this game where the cost of building a house 2 years ago was really high. In the last year, it was still kind of high. It's starting to come down a little bit, but not a whole lot. To combat inflation, the government has increased and continues to increase not just interest rates, but government spending. And the sudden surge in mortgage rates has slowed the market's growth and affordability, posing challenges for buyers looking to enter the market. In other words, there's a lot of people that were saying, Kris, we wanted to buy a home, but you know what? We won't. We're stuck. We don't know what to do. These prices are so high. Are they going to come down? At the end of this video, I'll tell you what I think. Well, Yahoo Finance has come out with some really strong predictions of where they think the market is going and what's going to happen to interest rates. And I'm going to tell you right now, getting a new president in the next 2 years potentially, that's also creating some political pressure on like, hey, the people aren't going to like us unless we can drop those rates down. So here's what Yahoo has to say on it. Right now, the average 30-year fixed mortgage rate is 7.14%, but Morningstar expects that that'll all trend down in the second half of the year and will average somewhere between 6.25% for the remainder of 2023. But they also forecast a model that expects mortgage rates are going to average 5% in 2024 and be down to 4% in 2025. I believe that once rates drop below 6% again, certainly below 5%, and if they hit around 4%, that's nearly considered free money again. And what'll happen to the price of real estate? Missing 6.5 million homes, by then probably closer to 7.5 or 8 million, the price is going to skyrocket again. Seems unsustainable, but now imagine that $413,000 median now becomes over $500,000 or even over $600,000. It's crazy to think of, but that is how supply and demand works in the game of real estate. But Kris, home prices can't just continue to rise. Zillow has a different opinion on that, my friend. Zillow expects U.S. home prices to increase by 6.3% by June of 2024, but they also predict that 48 of the 200 largest housing markets will see an increase of 7% or more. Now, let me put that in perspective. I'm going to pull out my handy dandy calculator here. So let's just take that $413,000 median home price home, and if all of a sudden we see an increase in the market of 7%, We're gonna times that by 0.07. That home is gonna go up another $29,000. And if we see 6.3% this year and 7% in some of those bigger cities, and if that trend continues, well, now you have nearly a $440,000, $450,000 median. Again, it begs the question, how are people gonna be able to afford that? Well, number one, rates need to come down. And number two, are prices going to come down? Check this out. What does this all mean? There's little consensus among economists, mortgage firms, banks, real estate firms regarding whether this historical tight U.S. housing market will reverse course in 2023. If there is a decrease in interest rates, expect home prices to not just increase, but soar. And the severity of this increase will likely depend on various factors, including the extent of the housing supply shortage, economic conditions, and location-specific factors. I know that as rates drop over the next couple of years, the price of real estate is going to shoot up. And I want you to think about this. Let's just say that you knew that a home was going to go up another $100,000 over the course of the next 24 months. Would you buy one or would you buy 10? Well, if you buy 10 and they each go up $100,000, guess what that means? That's $1 million. And if you're a subscriber on my channel or ever have been curious, like, I wonder how people become millionaires. 90% of them do so through the game of real estate. They usually own a handful of homes, and with time and appreciation, they go up in value. And before you know it, it's like, well, you know, in my 401k, my IRA, my retirement account, I saved a couple $100,000, but I have over $1 million of net worth sitting in the equity of a handful of homes. That, my friend, is why you want to buy real estate, and right now. Well, you've got a couple of options of what you can do with all this. You can do what most people are doing right now. It's called the sit and wait game. Hope interest rates go down and home prices stay steady instead of going up, and then you buy a home that you've been saving up for. Or your second option is screw personal residence. Don't worry about where your family's going to live. Instead, focus on investing. Right now may not be a good time to buy a primary residence, but it is definitely a great time to invest in real estate. And while everyone is wanting to buy, investors are seizing the opportunity and low demand and finding deals well below the median. And I'm telling you right now, after 2008, transacting thousands of homes, in the first 5 years, I made my investors over $100 million. And I swore to myself, the next time I'm in a recession that impacts real estate, I'm gonna buy as much as I possibly can because I wanna be on the greater receiving end of that. And there's a way for you to be on that receiving end with me right now. If you've been diligently saving up money in a 401k or an IRA, or you just have literally a house with some equity into it, and you have the ability to access, let's call it, $50,000. It's like, well, Kris, why would I do that? That'll cost me money, or that's set aside for retirement. If you want to go where the superior returns are in the game of real estate, I never touch a deal unless I'm making at least 25% a year on that money, as opposed to the stock market average on 30 years blended around 6%. Well, what does 25% do versus 6%? Well, I'll tell you right now that if you have $50,000 and if you were to grow that at 25%, that produces $4.3 million over 20 years. That basically starts with just buying one house. On the other hand, your returns are 27 times less if you just leave it in a 401k. Basically 50 grand triples, it grows to $160,000 over that same 20 years. So check it out. If you're serious about retirement, there's a link below where you can actually learn about partnering with me. I have a team of 200 experts. We buy real estate every day. And if you partner with me, you put up the money from a 401k or IRA. Look at my track record on thousands of deals with lots of partners. And if we do this, I will come in and actually do all the work. That way it gets to be hands off, it gets to be done for you, and it gets to be easy. It actually makes it doable for you, where most people say, this sounds great, but I'm not gonna take action on it because it's just too much work. I don't wanna go through the learning curve. If you wanna skip that learning curve, partner with me, click the link below, let me show you what that looks like. There are 5 reasons why you want to get into a better market and start buying real estate right now. Click this link right here, watch this video, let me give you the 5 reasons why you can't afford to skip out on this once in a decade opportunity.